TV18. Now, the Finance Ministry appointed Committee on Private Equity and Venture Capital Investment has submitted its report to the government. They have recommended ways to accelerate the flow of investments into India's startup ecosystem. The report has recommended ways to also ease the regulatory burden as well as make changes to the tax structure. Parikshit is standing by with more details. Parikshit, in the budget of 2023, the Finance Minister Nirmala Sitharaman had said that this committee would be set up. It took a long time coming, but finally the committee was set up, headed by the former SEBI chief M. Damodharan, and we understand that the committee has now submitted its report.
That's right. This report was prepared over 3 months. You rightly said this committee under M. Damodharan was set up in September, and it submitted its report to the Department of Economic Affairs around the 19th of December. It had members of former members of the RBI, former members of the Finance Ministry and economic experts, and it has really gone through in detail as far as all the issues that were faced by global funds and PE VC investors in India. We learned that the government could consider these recommendations for the budget as well, especially on the direct tax side. The report has exhaustively recommended measures to remove regulatory friction and acceleration of PE VC investments. One of the focus areas was to recommend ways to support capital needs of startups in a volatile environment. Among the recommendations, the committee has said that the fund managers should not be burdened with GST on carried interest, and the tax should be imposed at the investor end, and the fund manager should be considered as a pass-through. Also, fund management service provided to foreign investors should be treated as a deemed export, and foreign investors should not be asked to pay 18% GST on availing service of domestic fund managers. The committee has comprehensively looked at requirements of global funds and held consultations with the DPIIT, the RBI, the SEBI, and the Department of Economic Affairs. The report currently is under examination of officials in the DEA.
Parikshit, many thanks for joining us. Well, let's see how